Hello, everyone. We'll start in 1 minute, so those who are entering now, please be seated. In Hong Kong IFX Expo. So last year was indeed the year of ICOs, but what will be the fate of this new financial mechanism this year? Our experts will discuss the new reality of ICOs in Asia under the heavy guard of Beijing. So, before we start the panel, we'll have a short keynote by Martin Tate, a partner at Karaman Linoff Israelson. Please, Martin.
Hello. All right. Well, hopefully we're not too tired and sleepy after lunch. It's one of the hardest spots. But I'm just going to speak really briefly on the regulation of ICOs and token sales from the perspective of a United States-based attorney. I'm a securities lawyer, been practicing securities law in the United States now for almost 20 years. Was very active in crowdfunding and pre-Jobs Act, which was a crowdfunding act in the United States. I was involved with peer-to-peer lending and have represented some of the largest platforms, real estate platforms in the US. And about a year ago, which coincidentally I hear that I wasn't here a year ago, but I heard a year ago there was a little buzz about cryptocurrencies, but not much. A year later, how things have changed. And that's the same with my world. I was going to crowdfunding conferences, and just like that overnight, all my clients who wanted to do crowdfunding, now they want to do ICOs. There's a show that I'm sure is immensely popular throughout the globe called Game of Thrones. And as it started off, you know, maybe it was the first episode, but what is the kind of tagline? Winter is coming. And that's kind of my thought on the US regulation of token sales. There's been the SEC, which is the Securities and Exchange Commission, is the regulatory board that regulates the sale of securities. And like many regulators throughout the globe, they've sort of taken a back seat. They've watched what's going on. They've watched billions of dollars be raised. Last year, there was over $5 billion raised in ICOs. As I was just mentioning, I've been working with startups for my whole career, close to 20 years. I've seen some amazing companies in medtech, in innovative companies that struggle to go through these financing rounds. They go through VCs, they get beat up all along the way with valuation, and then you have companies come out with a white paper that's 12 pages long, and they raise $30 million. It's really mind-blowing. And the SEC, the regulators in the United States have definitely taken note of this, and they've begun issuing slowly a set of statements that says, we're watching what's going on, we're aware, and we want to make sure that these token sales fall within the regulations that happen within the United States, fall within the regulations of the United States. And this is what's happening, I think, in a lot of other jurisdictions as well. As we'll talk about, there are jurisdictions such as China who has come out and said, we're going to just outright ban ICOs and exchanges. You have other jurisdictions that are on the fence. South Korea, for example, is sort of back and forth. Do we like them? Do we not? Even within the government, you get mixed messages. So the United States, over the last maybe 3 months, there's been, or I guess 6 months, there's been some actions. And they're saying, we're going to look at these ICOs, we're going to look at what you're doing, and we're going to see whether it falls within our purview. And the SEC commissioner recently said, we have yet to see an ICO that I don't think qualifies as a sale of a security. So if it's a security, what does that mean? It means that if it's a security, it either needs to be registered or it needs to be exempt from registration. And so the regulators they're looking at this and saying, in all of these cases, we think it's a security, even if it's, quote unquote, a utility token. So what happens is I get clients that call me every day and say, we want to do an ICO, we want to do an ICO, and we have a utility token. And the reason why they want to have a utility token is if it's a utility token, then they don't need to comply with any laws. And that's one of the reasons why these ICOs have been popular is they've largely been unregulated. And as I mentioned before, I think that is about to change, not only with the US, but I think other jurisdictions. For example, Gibraltar recently said, we're going to regulate these ICOs, and here's the set of regulations we're going to do it. The US is taking a different approach and not saying, hey, we need to, we're going to introduce new laws. They said, we're going to regulate these under the current laws that we have. Now that's both good and bad. The bad of that is that we're regulating it under the law it's called the 1933 and 34 Act. Laws that are almost 100 years old, laws that didn't contemplate distributed ledger technology. So that's the bad. The good is that there's 80 years of case law, 80 years of precedence to say, for us to use to know how to look at these as securities lawyers. I've talked to many people here. Last night I talked to people. It was an interesting thing. Somebody said, what do you do? And I said, well, I'm a lawyer. I'm from the United States. Their eyes glossed over. They said, well, why are you here? And I said, well, I deal a lot with ICOs. And immediately they wake up and they say, hey, ICOs, tell me about it. That sounds great. Last week I was in Miami. I was at a conference. There were, thousands of people there, 3,000 people there, and that's all they talked about. So although the regulations, like I said, winter is coming, there's still a lot of buzz, and I think that this will continue to grow. I think the takeaway to all of that is that as the U.S. steps up its position and says we will regulate these, I think that other jurisdictions will follow. I think that if you are interested in doing a token sale within the United States, which a lot of people just simply have avoided that market, that it will need to be regulated and it will need to fall within the registration or exemptions that are there. And based on that, I think that that's a good thing. I think that that will provide structure that's much needed. I think it will help avoid many of the scams that we've seen. As a securities lawyer, it's all about disclosure. And like I said, we've seen white papers that are 12 pages long and raise millions of dollars. That's fantastic if you're a company. If I can put together a 15-page document, put it up on a website and raise millions of dollars, I love it. From an investor point of view, it's not so great. And from regulators, they really hate that. So I think the evolution towards more disclosure will help weed out a lot of the fraud that's there. It'll also weed out a lot of the garbage. I learned that there is a technical term called shitcoin, which is something that people issue. I didn't know that was technical, but so it will help get rid of those as well as the fraud. So with that being said, I think there's that this market will continue to evolve. It will grow up. It will become something that all of us, as we've gone through things such as evolutions in FX and other markets, we'll see something similar with cryptocurrencies. I don't think that they're going away. I think they're here to stay. I think other people on the panel would agree with that. But I think that although that the regulations within the U.S. have, although we're using pre-existing regulations, I think that many countries, including the United States, need to grow up a little bit. We need to look and say, maybe instead of having the Securities Act of 1933, we need the Securities Act of 2018, something that actually deals with and anticipates blockchain and distributed ledger technologies, because these are innovative ways to raise capital. These are fantastic ways for companies to raise money for their ideas, and I don't think it should. The last thing we want is regulators to stop that, but in the meantime, we need to balance that with the interest of the investor. So with that, we'll open up our panel and
Thank
Go
you,
ahead.
Marty. Can everybody hear me? Just doing a mic check. Okay. So thank you all for attending today. My name is Steven Itzakis with forexbrokers.com. And today we're going to dive into ICOs in Asia. And we thought to start the panel with Marty's introduction about the US regulations, because although the focus today will be on Asia and China, the other jurisdictions and the actions they're taking are highly relevant to how this all plays out, because it kind of every regulator is looking at what every other regulator is doing. So as the need for best practices emerge from different trade associations and different jurisdictions, all of these factors will be relevant even to what happens in China eventually. So having said that, we're going to start at the end of the panel, and if everybody could just say their name, title, and company, and we'll just make our way down and begin.
Hello, everybody. My name is Dmitry. I am a co-founder and CTO of Genesis Vision company. We create the decentralized trust management platform.
Actually, we might get to that later if we have time, but since we didn't have a shortage of people on this panel and we're limited on time, just keep it to name, title, and company. And of course, if you guys are interested in learning more about any company, just go on their website, check them out, and thank you.
Hi guys, John Lewis, CMO of Token Target. So, like Steven said, you can go to tokentarget.com to learn more.
Hi guys, I'm Adam. I'm founder of CoinDash, and I also manage our Shanghai operation.
Hi everybody, I'm Tal Ron, Tal Yitzchak Ron from Tel Aviv, CEO and chairman of Tal Ron Diamond Co. We're a law firm, we also have a booth there with UPay card, and I'm really happy to see so many faces here. Thank you.
Okay, yeah, Marty already introduced themselves.
Hi, John Patrick Mullen from Trade.io. I'm an advisor for Trade.io, but we'll be actually setting up the Hong Kong office in the next couple of months as well.
Hello, I'm Steve Chow, head of the Asia Pacific and the Great China market for our company B2 Broker, but we are not broker. It means business to broker.
Thank you. So I think we'll start talking about kind of the paradox, these opposites that are interesting in the ICO space, where on one hand, ICOs represent the most innovative form of crowdfunding, of raising money, and with these new cryptographic assets. But on the other hand, a lot of people are upset because projects are raising way more money than they would have ever raised through traditional methods. And there's like 50 shades of scams in the ICO space. So on one hand, there's so much opportunity, but on the other hand, investors don't have the tools to really know the difference. So having said that, with the US background that Marty talked about, I think we'll start with questions about like the PBOC's recent announcement to just like stop anybody that's doing anything with blockchain in China, and why that's important in the industry, and how China might change its position and welcome crypto maybe down the road. Perhaps, Steve, you can start by sharing your thoughts about the PBOC's action.
Okay. In fact, a lot of people get the negative news on the media, but when we look more deeply into the news from China, and you will find that we get a positive, because in fact that China is fully support the blockchain technology, and first of all we can see that why the China government bang on the ICO, because there are many, and the last year there are many ICO the company is based out of China, and certain of them just a photocard company. They have their ICO project doesn't make any profit to the investor. So, and there's no other choice that the China government banned them all. But on the news when it comes up, when I study the more detail into the China government attitude on that, because he just refused those ICO without projects. Everybody knows that the ICO is raising the fund. But if your ICO is raising the fund without project, that means it is a fraud. And the second point, that when you generate the ICO with the token has to be based on blockchain technology. Otherwise, the government doesn't accept this one. So everybody knows about the China government buying the ICO, but in another way, we see that, in fact, the China government is supporting the ICO, but if you are doing the correct way.
Okay, so John, Patrick,
Yeah, I'd like to jump in there real quick. I agree with Stephen in the fact that China has been supportive of blockchain technology as a whole. Cryptos are just one use case of blockchain, and cryptos have been a little bit of a point of contention, I would say, with the Chinese government. That being said, I don't think they're fully out there to ban everything.
Right. Perhaps the market there was just too wild because China has been like one of the leaders in alternative investments, and the market for alternative investments was huge over the past 5 or 6 years. So it seems that these investors just flocked into crypto projects,
Actually,
and it got a little out of control.
The statement that they came out with was not about banning ICOs, but illegal fundraising methods. So that included Ponzi schemes, pyramid schemes, etc. So it wasn't only meant to do ICOs. There was a lot of other illegal activity happening in the market.
Marty, do you think we'll see similar draconian measures like in other jurisdictions, not just in the U.S. perhaps, but other places where, we've seen in Korea, these type of banning actions. Do you think more of that's going to happen?
Well, I think one of the issues that regulators are trying to address is there is what John just said. There's fraud. There's massive amounts of fraud, but there's also criminal activities. You have terrorism and drugs, weapons. All of these things are they love cryptocurrencies, and so I think that as the regulators are trying to not only balance the interest of protecting investors, they're also trying to balance the interest of fighting these types of things. So I don't know if the word draconian is correct, but I think you will continue to see people step up their efforts. I think it's taken regulators some time just to get their heads around this, and like I said, even in other jurisdictions, people are they're back and forth on a daily basis trying to understand how they're going to treat these activities.
I agree. I think the industry kind of puts too much pressure on the regulators, thinking that they have all the answers. Meanwhile, they're still trying to figure out, and learn about blockchain technology. And I think that ties into the need for best practices to emerge. And I know, Tal, you've spoken about that. And how do you feel the industry could move forward, perhaps more AML, KYC vetting for projects, to be more compliant?
Exactly. Probably all of what you said now is if we take a look of what happened to the binary options industry, if we as an industry, and all of the people here in the room are people part of the industry, we're all partners in the industry. If we act together and we start, I think the first step is to be self-regulated and have high standards of compliance. I think that if the industry will regulate itself wisely and earlier, I think that there will be less need for a very forced and very harsh regulation that will kill the industry and will probably send 80% of the people, whether it's ICOs or exchanges, to the garbage of the history. And I think, exactly as Stephen, as you said now, if as brokers we take care of a full KYC of people who do business with us, if we allow withdrawals fast, I think that it's the first time I heard an American lawyer, an American attorney use the term shitcoin. If all this shitcoin will be eliminated, I think that maybe the market will be a bit smaller, but it will be much more protected and will work much more better.
So thanks for that feedback. I want to jump into marketing. I think that it ties into sort of the best practices because a lot of token sales are preying on the weak with marketing tactics, and the regulators are also looking at that and saying, oh, you're marketing this utility token like a security. At least that's been the trend in the US. So perhaps other jurisdictions can learn from that. And I want to ask John, with your focus on marketing, how do you see best practices emerging to help the industry self-regulate
Yeah.
when it comes to marketing
Yeah.
ICOs?
I think it's an important topic, as Tal mentioned, and Steve and John, is that I think we need to self-regulate ourselves. And I've seen some stuff happening in the binary industry, which I knew at some point it would end. And when you look at some of the, these funnels that are created, predicting all this money with just a few clicks of the mouse, if that's the direction that ICOs are going, then that's what's going to allow, regulators from all different countries jump in. So I think we need to self-regulate marketing practices and make sure that, you're focused on the product, the people behind it, really telling the vision and the story, as opposed to just promising, multiples, that you can make so much returns on
Exactly.
your money. Yeah.
Okay, Adam, what's your take on how like a blockchain company or an ICO could prepare themselves best to do an ICO as a utility token and not have it classified as a security if they're looking to go like the easier route, the safer route, because doing an ICO as a security perhaps could be a lot more expensive, a lot more rigid in terms of what you can and cannot do. So what would be your view on how to do it to launch a true application where the goal is to get network users who want to use your application and not just buy the token to make money because it might go up in value?
So a little bit of background maybe. Before I started CoinDash, I actually worked for eToro for 2 years. And I used to work a lot around compliance. And one of the main rules that we had around our ICO is never to market the token promising any sort of returns. And these practices I actually brought from working under FCA and SciSec regulation in eToro. So I'm guessing one of the first you could say action items for companies not to be, you could say, regulated or scrutinized as security tokens is essentially not to market and not to mention any promise of returns while creating a network effect and creating campaigns around an ICO.
Right. So not implying any type of future valuation change. But what about with the pre-sales and the discounts that are offered? I think that some legal opinion is of the opinion that by offering a discount, you're implying some future change in value.
Right. So I think discounts, there are other ways to look at it. Discounts are mainly given to participants that joined early on to the project and essentially assume more risk on an enterprise level and on the product level. So they are getting paid in the form of additional tokens in the ICO. Having said that, there are a lot of tokens out there that promise 1,000% or 100% discount, and that might be problematic.
Right.
But from the IPO model, earlier participants or underwriters essentially might get better access to securities for providing more value to IPOing companies.
Right.
So
they're providing the liquidity to fund the deal, but what about aligning their incentives with the token holders? Because it seems like some VCs would just get into a project and try to exit once it goes public. John, you want to comment on that?
I mean, to be honest, if you're getting in early and you're getting in big as a VC or a big investor, obviously you're going to be asking for some kind of premium, some kind of bonus. This is not necessarily the best interest of the individual retail investors who are getting in at the end, but that's the way the industry is right now. I mean, the reason that these crypto funds can get these humongous returns is because they can get in and then dump as soon as the ICO lists and leave the retail guys holding the bag.
So
Discount is not a problem. You can buy a book on Amazon and get 20% discount. The problem is the ROI. If you market, and John in some of his very effective campaigns, okay? If you say it's not your liability, but if some of the client, right, ROI 161% in a month, that's effectively marketing is security.
Sure.
Okay.
I'd like to ask Dimitri, what's your take on how to align the interests of the pre-sale investors, VCs, with the future token holders during the ICO so that the VCs don't just dump the coin, maybe putting lockup restrictions, things like that. What is your take on maybe the technology that can be used, on the protocol level, the application level, to achieve that?
All right, so the most important thing here, I think, to find a balance, because discounts is not the only way to provide tokens. To increase the audience, there are some airdrops of tokens where people get it for free. And the thing is, these free tokens, they put these investors in danger. Because, well, they will be dumps anyways. Lockups is a way to do that. And I think most importantly, it should not be a lockup for investors, but more for a team, for advisors, and all the people who are involved into this project. That's fair for them to keep these tokens and hold them until the proper level of the project.
Right. Because I guess on the other hand, if there's not enough interest in the project from investors and it doesn't have enough momentum, then it won't be able to succeed. So it's I guess a matter of balancing these two. Just to get a gauge from the audience, how many in this room have invested in cryptocurrency by a show of hands? Okay, that's at least almost half, maybe 40% of the room. And from those of you who have, how many have invested in ICOs during the pre-sale? Okay, that's probably about half the number who had raised their hands, maybe 15, 20% of the room. All right, excellent. And I guess, I'm sorry? How many made money? Okay, that's a good question for later, perhaps that we could actually talk about, because, and we'll open the room for questions, so thank you on that. I think the lockup on the tokens really puts a commitment for you to be aligned long-term with the project. And traditionally in venture capital, most people who made money in the VC world made money precisely because they couldn't get out, on a secondary market, because their fund, shares were restricted or locked up. So where do we go from here? In China and in Asia, it seems that there's more freedom in terms of investing in all these ICOs up until recently. Okay, that's changed now. It's kind of the opposite. But where do we go from here in terms of developing those industry best practices where maybe the government could start to open up to some proposals or some ideas? And this is open for anyone.
I want to weigh in on the China problem and China ICOs. So China ICOs, as opposed to what many people think, is very much live and active. The industry is booming over there. What happened after the recent regulation is essentially that a lot of Western projects have decided not to go to China in order to raise funds and for different roadshows or user acquisition and the rest of it. And the local industry, the local ICO projects are actually doing extremely well. So if you look at companies like DeepBrain, Binance, AELF, these are all born and raised Chinese ICOs that are using, a Singapore entity or an offshore entity in order to market their ICOs, but essentially they are working from within the mainland, and the industry is really booming over there right now.
Now, do you think that's because of the crypto-to-crypto trading, or exchanges like Poloniex, for example, where there's no fiat on-ramp, there's no facility to deposit cash?
So I think one of the main reasons, and I just mentioned it earlier on, is the fact that companies, for example, like Status, Aragon, that used to come to China all the time, following the ban, have stopped coming to China because obviously you cannot market any crypto activity over there. But, and then what happened is that companies like Genero or local companies, Chinese companies, have been gaining a lot of traction since local investors have a lot of capital, but they don't have any ICOs to choose from. Now, our company, for example, we're one of the only ICOs that actually had a physical office in China even before our ICO and up until today. So I've been leaving this space for the past year, and it's booming.
John, you want to add
another element of another wrinkle of the China story is that you don't really need a fiat to crypto on-ramp because you have things like local Bitcoin, local Ethereum, and you can actually just sell and buy cryptos over WeChat. I'm in several WeChat groups where people are selling and buying Bitcoin using Alipay, using WeChat Pay, and it's happening all the time.
Do you think that accounts for a lot of volumes in Asia since
At least in China, yes.
everywhere else it's
in
restricted
China,
for
in China, yes, for sure.
Excellent. And do you think that's scalable? Because in other jurisdictions, like there's, sort of these decentralized, not exchanges, but like I think there's one where you host the node on your computer, and then it actually works with bank accounts, but it's not very scalable. And I think this segues into maybe our next topic about decentralized venues, decentralized exchanges. This is another big theme in the industry that's becoming important, because ICOs will try to list their coin somewhere once they raise money, and one place could be like a DEX, a decentralized exchange. What are your thoughts about that?
I mean, I think decentralized exchanges are really great in practice for the crypto community. That being said, they don't really function all that effectively and efficiently. As you've seen, Ether Delta, which is one of the main decentralized exchanges, has been hacked. People are selling fake tokens. There's all different kinds of illegal activity happening on there. It really kind of goes against a little bit the ethos of what blockchain is all about, but at the same time, you need efficiency, you need safety, you need security. So
we're not there yet with
we're
decentralized.
definitely not there yet.
Okay. Marty, do you have any thoughts on decentralized venues? Because essentially, if liquidity flows to these venues, it may be hard even for the regulators to regulate a venue that nobody owns, that's kind of distributed. Again, if we could overcome the challenges, like John Patrick mentioned, with the DNS hack at Ether Delta.
Well, I think that's one of the scary things about this industry is just that. I mean, if an exchange becomes decentralized, again, I think there has to be accountability, and perhaps there will be popularity with that, or traction to it. But myself as an investor, I would be leery of that. I know that again, and I'll come back to things that I'm seeing as far as best practice, but in the United States, there's actually a company called T0, which is a subsidiary of Overstock.com. They plan to have the first regulated tokens or security token exchange. So for those tokens that actually go through a registration process, whether it's in the United States or otherwise, and other tokens, there'll be a central exchange that's regulated. Which I think makes a lot of sense. It will encourage people to go through the right steps, and it obviously encourages increases investor protection as well.
So you think that it might be safer for the community to use existing framework and legal venues like, I think they're registered as an ATS, an alternative trading system, and use the existing laws and existing framework and find a way to leverage that. And I think we're seeing that on the crypto side as well, with some, like half of the brokers I've reviewed on forexbrokers.com offer crypto as a CFD. A few of them offer the underlying as well. Dimitri, what are your thoughts on, ICOs who raise money and then want to list their coin on an exchange, either choosing, a Binance or a regulated crypto exchange or a decentralized venue? Because I feel these choices affect, other factors like whether the coin might be dumped or, how the market making will happen for the coin's liquidity.
Yeah, of course, the listing of the token is essential for its value. But I think that you should, again, keep the balance here because, your token will be listed on Ether Delta anyways. So that's what happens with most, especially ERC20 standard tokens. But speaking about decentralized exchanges, it's become more and more tricky because, that's a business, that's a company, and they can make some offers for you for listings. They make money on that, on commissions, on listings, and on each stage of the project, you should keep in mind what real volumes you need, what liquidity you need for a token to operate on a current stage. So if your token is not used in a platform yet, it's just a speculation, for example, for now, because your project is still under the development, then probably you don't need to be listed on all exchanges, and this is simply unnecessary because you won't use this liquidity.
That's fair.
Yeah, I would agree that liquidity is obviously a significant issue for traders, particularly on a lot of these exchanges. And I think with a decentralized exchange, sometimes you're just going to be lacking that liquidity, and the bid order matching is going to be difficult. I think one of the things that our company is doing is kind of having a mix of a centralized and decentralized elements. So we're a centralized exchange with a decentralized liquidity pool. So I think that's something that could also become somewhat of an industry standard as well.
And it seems that liquidity is always going to be sort of limited just due to the nature of crypto and limited supply. And arbitrage is prevalent as well in the industry. Some people frown upon that. On the other hand, exploiting that arbitrage can help the market become more efficient. But I feel this also ties into the pump and dump that's happening, and that's giving the industry a bad name. Where could best practices emerge perhaps there? Steve, do you want to add to that?
Yes, I would like to talk about the cryptocurrency liquidity. In the stock exchange market, there are the exchange, and then the second level, we do have the stock exchange broker, and then to serve the retail investor. But in the past, that in the cryptocurrency, you will find that there's only exchange and also the retail investor. In fact, there is no broker. But on last year, already the market has changed because there is the aggregator right now in the market since the last quarter that integrate many trading platforms and exchange brokers and financial institutions to form a large trading liquidity pool that to consolidate their the selling prices with the number of transactions altogether, and that's provided to the market.
Like a dark pool, or what is this?
Not a dark pool. It's in a trading liquidity pool.
Okay. Like a proprietary trading pool?
Yes, as everybody knows that right now and last year, Japan issued a license. In fact, there are issued a license for 17 exchange. Mm-hmm. So this exchange is officially can trade the cryptocurrency with the fiat currency. Okay, and as I know, there's another 23 exchange on the way applying for the license. So this aggregator last year has already consolidated, aggregate these 17 exchange, the trading liquidity in a pool. Then what happened? Because this will give the world, the market, this liquidity, and even for the exchange, they are not just selling or trading their own exchange orders. They can exchange with others too.
Exactly. It sounds like kind of what happened in the FX market with prime brokerage liquidity is kind of happening naturally in the crypto markets.
Even look at the confusion. It's exactly it shows and demonstrates the confusion. Like Gibraltar, until the end of 2017, was probably the best way to go for crypto licenses if we put the US apart. But now everybody's speaking about Estonia, and they have something really from the last month, like a crypto license, and that shows exactly the confusion and what can be the result if we won't have a way to work and to regulate. And Estonia is starting; it's part of the EU, and if you see it, there's lots of links of many ICOs and crypto exchanges, and even companies who send feeds to Estonia, and it's very interesting. I really recommend.
I think that's a good point, because a lot of ICOs will sometimes choose jurisdictions where there might be some tax efficiency, but then there could be other jurisdictions that they operate out of where they might have an ultimate tax liability. And I think there's a need also for best practices where the ICO issuer will know what their effective tax rate is, because that's money that they have to pay from the money they raised and the token holders. So I think that's an important subject as well, especially like countries like Belarus announcing recently,
Belarus
tax-free.
is fake news. I call it fake news. I didn't see it in practice. Sorry, I really respect.
Okay, I think we have 5 minutes left, so we're gonna open the room up for questions. But before that, if there's any advice that each of you could just give in a quick bullet point format, 20-seconder on for firms that are thinking about capital raising, through an ICO, whether it's pre-mining it, airdropping it, not doing a public sale, but just raising, funds either privately, publicly. What is your best advice to them, given the current situation, globally, regardless of their jurisdiction or in China?
Okay, I'll start. As a blockchain developer, I'd like to say that you should not forget about the technology. The technology itself provides a lot of transparency and solves a lot of issues with the reliability and trustworthiness of the project. Keep everything in blockchain, keep it open, all these wallets, all these transactions, how it should be basically. And that makes your project more trustworthy.
So you're saying transparency. Right, excellent. John?
I would just add, again, I'll just reiterate what we talked about before, but just try and keep your marketing compliant and not to promise things that you cannot deliver. I think that's what's going to end up being best, not only for the ICO, but the industry as a whole.
So balanced messages,
Exactly.
no over-promising returns or... Got it. Adam?
So I think that 2018 is going to be very much the year of products and real use cases. And what I would suggest to companies who are considering doing an ICO is to be fast to market and try to have a plan with which you can issue a product, launch a product in a few months time span, not have a 2-year roadmap. It's not feasible.
So, okay, proving the use case in a reliable amount of time and not down the road, that's very valid, I think. Tal?
A part of giving the obvious value to the investors or to the clients, probably the terms and conditions should be written nicely, not copy-pasted from other ICOs that you saw, and make sure that everything is fully compliant.
That's a great point. I think with the SAFT agreement in the U.S., that was a big problem. People were just copying the SAFT agreement and using it and relying on it too much without getting proper legal counsel. So, Marty?
Yeah, so I think that we can be reminded that the token sales originally started as a way to fund these small projects. The tokens had a utility within that ecosystem, within the blockchain. I liked what Dimitri said. Let's not forget about the technology. I have clients that call me all the time and say, this is what we want to do an ICO, and they don't have blockchain technology. They shouldn't have blockchain technology. They're selling, widgets. They're selling bicycles. Literally, I had a client call and say, a bicycle company that says, we want to do an ICO. But it's now become a way to raise capital. And I guess my advice would be, if you're anywhere within that food chain, whether you're an ICO, an issuer, a marketer, a promoter, a broker, dealer, that you are compliant, that you are doing those things that both, as said before, that you're self-regulating, but you're also making sure that you're compliant within the jurisdictions where you're offering those sales, because the long arm of the law is reaching. There was somebody that was arrested in Greece.
Right. Don't just add blockchain to the end of your company name like
Yes.
Kodak did or Long Island blockchain.
Yeah, exactly. There was a warning issued yesterday that I think they're coming after them. So.
Good advice.
Yeah, I mean, I can only agree with what they said about that. And there's going to be a lot of reverse ICOs in 2018, which is existing companies doing an ICO to raise funds. So make sure that you actually have a use for the blockchain in your company business. And then number 2, security, security, security. You've seen a lot of breaches, a lot of hacks. Make sure you get that right, or you're going to be putting your investors at risk.
Definitely a need for best practices there on the custody and like the recent hack with IOTA, where the random number generator wasn't truly random. That's a risk that could be prevalent across wallets. So that's a very valid concern for the industry, for sure. Steve?
So I would like to share one news with all of us. January 2018, in the World Economic Forum, from over 30 countries forming the Global Blockchain Business Center, a council, that China take the leading role to bring all these council members together to advance the global understanding of the blockchain technology, and also to find out a mutual understanding how to regulate for the future blockchain development, and also for the cryptocurrency and the ICO.
That's happening now in Davos.
Yes,
and I think this is a good point.
In this month.
Right. Yeah, I think that's key because the G20 is going to talk about crypto regulations and propose them, and along with the U.S. SEC and CFTC just issuing a joint statement, it seems like there's going to be some coordinated regulatory progress, hopefully for the greater good that helps the industry. So, having said that, thank you everyone, and now we could open it up for questions. So. If any of you have any pressing questions, please. I guess we just need a microphone. Okay, the question is the comparison, the difference between ERC20 tokens or tokens that are launched on one chain that are not native to their own blockchain versus cryptographic assets, digital assets that have their own blockchain that didn't piggyback off someone else. So who would like to take this question?
I can add a comment. I mean, I think it's an interesting element to do an ICO on a different blockchain. For example, a lot of people have flocked to Neo, the Chinese golden child or best son to do ICOs, but and they've had successful ones where they got whitelisted and oversold very quickly, oversubscribed very quickly. But you haven't seen too many Neo tokens, raise significant amounts of money and then jump into the top 10 like Neo has. So you have to take you're taking some risk, I think, by not necessarily doing it on Ethereum blockchain. It's simpler if you can raise in Ether, I think. Everyone has Ether, not everyone has Neo.
Okay. Anyone else on that question? As far as, I mean, everything's a fork of the Bitcoin primordial, protocol. So I guess, every crypto out there is either piggybacking off someone else or some variation of the first one. But Dimitri, do you have thoughts on that?
Yeah. So one important point is how this token will be used for your project, because there are projects that require high scalability, for example, and then ERC20 token just won't work because Ethereum has some problems currently with that. If it's not an issue for a project, then I think it's a good idea to go for a most standard thing.
And it sounds like also that this is also a question of the difference between protocol development versus application development. So a lot of tokens like ERC20 tokens, they might be application tokens, but some of them also could be trying to launch their own protocol variation off Ethereum.
So
I think we have, Adam?
There's something I want to add about this. The word piggy banking, I'm not sure it's the correct terminology, because essentially ecosystems like Ethereum or Neo or Qtum were created as liquidity pools for other companies to build decentralized applications on top of. So the Neo Foundation and the Ethereum Foundation definitely do not need $80 billion for doing whatever they do and solving the problem of scalability, but they do need dApps and use cases to be developed on their ecosystem. It's like having Windows without having, Word and Skype. Nobody will use it.
So you're saying that somebody could launch on Ethereum like kind of their own version of Ethereum, where on their product, which again piggybacked off Ethereum, let's just use it for a moment, after they launch their product, they're like their own Ethereum and they could launch other applications on it? Is that what you mean?
No, it's definitely not what I'm saying. What I'm saying is Ethereum is essentially an ecosystem, right?
Right.
You could say it's an operating system for people to develop decentralized applications or application use cases.
It's agnostic to the application. It's neutral.
Essentially, yes. So when I'm developing, let's say my project, we're an ERC20 token. We never thought of piggybacking off any blockchain, but essentially we viewed Ethereum as a liquidity pool, which invites projects and companies to raise money from this liquidity pool and create use cases.
Sure. Easier to raise money there.
Will make more people use Ethereum, and by that will create more demand for Ethereum and validity to the ecosystem.
I think back to the question, perhaps many investors are concerned that some project was just easily launched on Ethereum and there's really no substance behind the technology. That could be one concern, but I think it also depends on the utility, as Dimitri mentioned, and how how much, how useful that token is within the platform or product.
Just a really small comment about that.
Sure.
Right now, the biggest use case for the Ethereum network is ICOs and ERC20 tokens, by far the biggest. So without that, I'm not sure like the whole ecosystem would have risen to the level it is today.
Absolutely, absolutely. Yeah, it's like an accelerator for ICOs, and that's kind of what the whole industry is. ICOs in general are an acceleration of investing into the blockchain frontier and pushing this whole industry forward. So that is it. Thank you everybody for your time and for joining us today. And until next time, we'll see you next year.
Thanks.